This podcast is for informational purposes only and is not an offer or solicitation of an offer to buy or sell securities. SNN Network, SNN Inc., and the Planet Microcap podcast and the representatives are not licensed brokers, broker-dealers, market makers, investment bankers, investment advisors, analysts, or underwriters. We do not recommend any companies discussed. We may buy and sell securities in any company mentioned and may profit in the event those securities rise in value. We recommend you consult with a professional investment advisor, broker, or legal counsel before purchasing or selling any securities referenced in this podcast. Welcome to the Planet Microcap podcast. I'm your host, Robert Kraft. Thank you all so much for the support and for tuning in. Do me a quick favor. If you like what you hear at Planet Microcap, please take 2 seconds to give us 5 stars on Spotify or Apple. This helps with the search engines so that more folks can also discover and engage with all things microcap stocks. We're excited to announce that we'll be partnering up with MicroCap Club for our full slate of investor conferences in 2025. Ian Castle and his team at MicroCap Club not only built and fostered the best community of microcap investors, but it's arguably one of the best investing communities, period. We couldn't be more thrilled to leverage our expertise in curating and hosting large-scale microcap conferences and teaming up with MicroCap Club to put together world-class conferences for the microcap community. First up, Planet Microcap Showcase Vegas in partnership with MicroCap Club will be held on April 22 through 24, 2025 at the Paris Hotel and Casino in Las Vegas. Registration is now open. Please visit planetmicrocapshowcase.com for more information. See you in Vegas. Now, my guest on the show today is Nick Blitterswyk. He is the CEO of UGE International. On May 29, 2024, UGE announced an arrangement agreement for going private transaction with Nova Infrastructure Fund for an all-cash consideration of $2 a share Canadian per common share, a 270% premium to the closing price of the common shares on May 28, 2024. The company officially closed the planned take-private transaction on August 15, 2024. And today's interview has a few factors at play here. One, we've done quite a few interviews recently here, for instance, with Mathieu and Paul Andreola, about how M&A has been hot, particularly in Canada for the last 12 to 18 months with no signs of slowing down. And then two, I've known Nick now for almost 10 years, having first interviewed him back in 2015 and have covered the UGE journey from beginning to now conclusion of their life as a public company. So I wanted to share with you all a conversation about Nick's experience as a microcap public company CEO, what it means to run a microcap public company, what happened and why now was the time to go forward with the transaction to go private, lessons learned, insights to pass on about his experience being a microcap CEO, and more. Now that the deal has officially closed, I really appreciated Nick's candor, and hopefully a lot can be gleaned from this episode that the entire microcap space can learn from, as well as a glimpse behind the thought process when faced with the prospect of staying public versus being acquired/going private. Thank you again for tuning into the Planet Microcap podcast, and please enjoy my conversation with Nick Blitterswyk. Nick, thank you for joining me today. How are you doing?
Very well. And I should say, current CEO of UGE International Inc., which is the surviving name after we've gone private. But great to see you again.
Absolutely. It's great to see you. And look, the main reason I wanted to invite you on here today is, it kind of hits on multiple big topics that are going on, not just from a macro of the micro perspective, but also it's a bit of content that we've never really done, which is that kind of post-acquisition experience, kind of just looking back a little bit on how it all came to be, what your mindset was, and really just covering that. So, and also from the perspective that it seems like there's a new, Canadian microcap acquisition every week at this point. So, we did a due diligence series episode in October last year, where you're talking about all, what's going on with UGE and some of the runway and the growth trajectory. And so I just thought it was very fascinating. And I think came as somewhat of a surprise to a few of us when you guys announced back in May earlier this year that UGE was entered into the arrangement agreement for going private. The name of the company was Nova, right?
That's right. Yeah, Nova Infrastructure. They're a New York-based private equity infrastructure investor.
Absolutely. So, all right, take us through the genesis a little bit. Maybe just start off real quick for those that didn't ever hear any of the interviews that we did together or know the UGE story. Can you just give us that quick overview of the company so that we have that perspective? And then I'll ask that follow-up of, how it all went down and everything.
Yeah, no, sounds good, and really looking forward to this conversation. By the way, I think that the community that surrounds the microcap markets is one that I've really come to enjoy, and there's a lot of great people that operate in this space, and a lot of really smart people too, who make their living from finding underappreciated stories, which of course we ended up feeling like we were one. Brief little background. So UGE is a developer of kind of mid-scale solar projects, community solar being the biggest part of that. I started the company about 15 years ago. We were public from August of 2014 to August of 2024. So pretty much exactly a decade. Really growing from pretty earlier in our infancy to a point where we were really starting to gain some scale, developing projects, holding them on our own balance sheet, and building a portfolio. Without going into too much detail or belaboring those points about what we do and so on, I think we had gotten to a point where there was real value in our portfolio, and we really felt like the market was having a difficult time grasping that value, and we felt like that was only growing over time, and it was going to be, frankly, several years as like these projects matured and grew, and the portfolio grew before we felt like that portfolio would start to be valued the way that maybe traditionally, maybe some other microcaps would have been valued more aggressively. So I think just looking at all of that, really over about a 2-year time period, we were first receiving inbound, started to consider it, actually went through a process of saying, thanks, but no thanks. Like we feel good where we are, and we're going to keep going at it. But another year passed, and kind of nothing had changed. Maybe it even gotten more of a disconnect, and also really liked who we were starting to work with at that point in Nova, and ended up deciding to take the plunge to go private.
Absolutely. I mean, was part of the reason, and just going to ask you point blank, right? Was we were waiting for the market to realize some of the value that you thought wasn't being realized? Or were you like, no, no, or really was it from the business perspective of like, hey, no, we want to continue to keep growing the business? What was your thought process? Was it a mix of both even?
Yeah, I think more the former. Yeah, I just alluded to us going through a process, let's say like end of 22, early 23. So, a year and a half before we end up taking the plunge, or about a year before we agreed to take the plunge, because of course there was a lot of work involved there. But uh, yeah, we were like, you know what, like 2024, we're going to have, or sorry, 2023, we're going to have a lot of milestones. Our portfolio is starting to mature in a big way. 2023 was by far a record for us in terms of new projects reaching that NTP milestone where they're de-risked and ready to build. So we really kind of felt like we were taking a bet on ourselves to push that off for a year, and hope that the market would start to understand what we were doing. And of course, that didn't play out that way, and so we ended up, going the go private direction.
What do you think was some of the reasons why? I mean, obviously, you were having the conversations with very intelligent investors. Quite a few of them that I knew were, either on some spectrum of small to large shareholders in the deal, big believers in it. What do you think the market was missing?
Well, I think our earlier I just mentioned how aspects of the story were going to take several years to probably play out to maybe the common investor looking at our financials and grasping the value we were building. I'm talking about the cash flow and EBITDA from our projects, etc. In the shorter term, it's more a matter of your pipeline and how the market values that pipeline, etc. And so I think like there was a fairly select group of individuals who took the time to understand that, meet with myself, and also meet with other members of the company and the industry and so on, to build up probably that trust that like, this is what those projects give or take trade for in the public markets, etc. Almost all of our peers are private, so you don't get many public transactions in our space. So there were a select group of people who I think had taken that time to understand that. But I think that where the disconnect may fall is that sort of like maybe your common microcap investor who likes to follow trends or trading activity, or what have you. It was a complicated story for maybe the casual investor to grasp onto, number one. And then number two is there is a lot of capital in large IPPs and so on in this space, multi-billion dollar market caps and what have you. There's a lot of research coverage around that space. Like that's a fairly well traded, well understood class of companies. But the institutions and the pension funds and so on that invest in that space don't invest in the type of market cap that UGE was at. And so there was like, and actually there was a number of people that sort of or like people from institutions that invest in that space who I'd kept good relationships with, and probably over the years, like several times I was like, oh, we'd love to invest in UGE. This got to grow a little bigger for us, and of course it didn't quite happen in time.
I mean, you never know. They probably had their own personal PAs and like trading in and out. You never know. I mean, isn't that so often the case with microcaps, right? Is you'll have the great conversations with some of those institutions, and they obviously can't do something because they're a larger institution, but on their own personal PAs, they're like, no, that was cool. Like, oh,
Perhaps.
you never know. I mean, this is kind of an interesting this is really a fascinating part of this because I talk with, as I mean, we've been doing CEO interviews for gosh, since you became public, I think back in
Almost.
2015, right?
Yeah.
So you've experienced the whole swath of everything that being not just a public company CEO experience, but also being a public microcap CEO experiences. So maybe speak to a little bit of some of those challenges that you did experience, because I'll add even a third wrinkle. You were a non-mining, non-resource junior mining public company, microcap public company CEO listed on the TSX, which
Yeah.
that onto itself sometimes, you get buried amongst, just how many companies are just on the mining side that are listed on those exchanges. So, I mean, speak to some of the challenges that you did experience there.
Well, and I'll say, like, I took the company public when I was, I think, 33, and probably a bit young and naive in terms of what it was going to mean to be a public company CEO. I had personally starting in like high school with money from my fast food job, like put $100 here, $100 there, and just became really interested in the public market. So it was like a personal interest of mine. And then as I was growing the company, and it was kind of family funded for the first few years, and as we were starting to think about raising more capital to grow the company, without belaboring the point, kind of got to a point where it was like, what, like I followed a bunch of Canadian public companies before. I think we could be a good Canadian public company and go public. And so we did there. Started trading in August of 2014. I think there's probably we could probably do a week of 1 hour interviews and talk about all the ins and outs. But I think like I learned a lot of hard lessons in those early years about, you know, frankly, some of the shady characters in our space, the people who are really, I would kind of call it heads they win, tails I lose type of thing. The check swap types of things and stuff like that. I had really raised all the money, including when we went public myself. And I remember like the first time in 2016 where we did like a bank-led private placement. Actually, I think there was like a prospectus at the time, if I'm not mistaken. Realize just sort of how much you need to watch out for yourself and the damage that warrants can do to a capital structure and so on and so forth. And so, that was like a lot of really hard lessons learned over time. Conversely, I think that we had really learned that over the last several years. Obviously, the market, I personally think it's kind of coming back here a little bit for the smaller names, but it's been, of course, fairly tough since the heights of early 21, and maybe didn't have a full chance to experience the next upturn there. But yeah, I think. Well, maybe just a couple other things is like people will talk about, you'll get pitched so many times about increasing liquidity as some of our I'll say Ian Cassell's name. I know we're both fans of him. Like he'll talk about liquidity, like a lack of liquidity is actually your friend, not your enemy. But the amount of times I got pitched over the years about needing more liquidity, I could so there's all these types.
Especially being Canadian listed. I mean,
Yeah,
my
well,
goodness, it's rent.
yeah, which also speaks to sort of the lack of depth in the market, the lack of people trading in the market to a degree too, right? But maybe my last note on that would just be, I think like there's so many of these types of things where you're spending too much money on IR or on trying to create liquidity or, you know, newsletter writers and all this type of stuff that I really feel like you're just spinning up a treadmill, and like that stuff catches up to you. And you know, I always of course tried my best to run and build a good company, but it can be extremely distracting. And so anyway, I'm kind of rambling on a
Well,
little bit at this
no, you know
point. Yeah.
what? You know what the thing is that it speaks to two aspects for, when companies ultimately decide to go public, right? There's the companies that decide to go public because, okay, it's an exit for existing shareholders. We now can use our, company stock as potentially to make acquisitions or, there's just so many more ways of growing the business as a public company that maybe aren't afforded the same luxuries or diversity or abilities that you can when you're a private company. Conversely, if you're going to go public, not just to, raise capital and all that and build the business, whatnot, but you're running it in order to just get more liquidity and raise the price of your stock. I mean, it just comes down to like, what is your ultimate purpose for why you want to be public? Because we don't want to dissuade anybody from ultimately going public because there's so much, I guess you'd say positive aspects to wanting to go public and, especially earlier on in your life cycle, especially if you're a quality business. We don't want to dissuade folks because that just, that hurts our capital markets infrastructure in a lot of ways, but at the same time, you got to be careful once you are public and not to be, sold a bill of goods from, like you said, understanding the importance of being liquid and all that stuff. Cause at the end of the day, that's usually where a lot of CEOs just get lost.
Yeah, yeah, I know exactly. And it really, like, you know, at the end of the day, it really does come down to, you know, building a good company, building good value, and being patient to find the right investors for your company at your right point in time. And I will say, like, I have a lot to be thankful for how the markets treated us, and frankly, allowed us to stay alive at times, right? I mean, I think as
Yeah.
you may recall, like, you know, mid 2018, the Ontario market, where Ontario Canada market, that we had been very heavily invested in, the bottom fell out of that market, and we went through a pretty brutal turnaround, like late 18 to 2019, and really, like, you know, at that point in time, it built up maybe you know, a bit more of a Rolodex of who to lean on for some assistance during that time. But that was a fairly, you know, dark time for us, for like two hands on the wheel, white knuckling it through. And then ultimately, you know, the market, well, left us for dead for a little while, but ultimately also was sort of our salvation as we cleaned up the company and we were able to start tapping the markets again to grow the company, really starting in beginning of 2020.
Right. Once you made the pivot and everything like that, like
Yeah,
that's, yeah. Yeah.
exactly.
So, I mean, it sounds like you don't really have any regrets about going public earlier on in your life cycle. I mean, or do you have any regrets about doing it, or maybe there's some aspects of it, or are you ultimately like, all right, this was a net positive. I'm thankful that I did this process.
Well, I think that, and I'm in some conversations to assist some other companies, whether they be public now or be public in the future or whatever, and even on an informal basis. Like I feel like I learned a lot over this past 10 plus years, and want to be helpful wherever I can. I do think I was a bit kind of young and naive when I took the company public and didn't surround myself with people that I could trust, that I could go to for advice, etc. And I do see companies making some of the same mistakes I think we made in those early days. And I think so. In terms of your question about regrets, I do wish that I had maybe listened to advice and found more ways to get advice at that point in time. You will get like a lot of conflicting advice, frankly. So at the end of the day, you need to, of course, find ways to come up with your own thoughts there. But no, I think, you know, at the time we went public, yeah, I think no regrets. Wish we had worked out, you know, that much better for shareholders, especially ones that came in pre-turnaround. But no, at the end of the day, I think I'm proud, frankly, for us giving it a good go. And I do hope to be around the markets, you know, going forward, and in one way, shape, or form, hopefully put all these good lessons to work.
What were the types of individuals or groups of folks that you wished you would listen to earlier on that maybe you started listening to, post pivot, that kind of thing?
That's a really good question because like when we went public through a CPC, as you know, I'm a Canadian. My first job was in New York. I was in New York for a while. Tapped a Canadian I knew who had a CPC, and he brought two other people, really one other person who had been a prior public company CEO into our first board when we went public. But I didn't have any connections in the Canadian markets for people that I could talk to, et cetera. And of course, like when you talk to a microcap banker, like they're going to have one pretty strong set of opinions down one way, et cetera. I think that probably at the end of the day, I wish I had sought out and spoken to some other present or past CEOs. I think maybe CFOs as well, but the people that had been in the driver's seat, because I think at the end of the day, those are the ones that probably seen the most of these different things and can educate you. But yeah, frankly I didn't know a lot in those early years.
I mean, was there ever did you ever have second thoughts about like, all right, made the decision, we're going public. But did you think for a second like, all right, TSXV versus, maybe direct direct listing on OTC or even Nasdaq when you were initially going to go public, or was the plan like, all right, no, this makes sense like for where we're at, the size of our company, like let's go on the venture exchange and then kind of go from there?
Yeah, no serious deliberation on that point. I think 2014, and we started the process in 2013. At least as I understood, like it was before sort of CSE and NEO and these types of things became more popular. So from that perspective, that was what it was. From my perspective then and now, I also think that the microcaps in Canada is probably like a cleaner place to be than like being a pink sheet company in the US or something like
Not
that.
not not to interrupt you, but like when I was joking about how like non-resource, it's still a very vibrant ecosystem, even
Yeah,
if TSX, TSXV, it's primarily mining, focused. Like
yeah,
that doesn't mean that the ecosystem isn't vibrant, and there are a lot of players up there and folks that
yeah.
it is a very active ecosystem regardless.
Yeah, well, and one thing that I feel like I need to say to link to that, but one thing that I think now I think we probably all wish that there was just frankly more investors in the space because there is a number of, as we can see by all these go privates, for example, there's a number of undervalued, underloved companies in that space that are viable, and they don't, and there should be more activity if there could be. Well, one aspect of that, and this is a little bit of a tangent, but like one thing I miss is people like for example, Bob McWhirter from Selective Asset Management, if that name means anything to you. He used to have, what was it, a weekly or something, spot on BNN where he would talk about, sub $100 million market cap companies. And I think he got booted off. I don't know any insider information, but I feel like the Bloomberg BNN now, I think they're just like a folks being very gun shy about just being able to talk about these interesting, unique, young growth companies in the public sphere because a certain number of them run out of capital or hit a speed bump or whatever the case may be. And I think that's part of like the vibrant eco space that I remember from when I was playing in the space, which is really, started out in the kind of the .com bubble type of days. But there's just like a lot more information sharing in the public space, et cetera. And now where is it? It's all on, Discord and public forums and things like that. That is anyway. So there's that.
Joke just on
Yeah.
here. You could say it. It's just on
Right.
here. No.
Yeah. No. Yeah.
Forums
Yeah.
like us, microcap club, GM Invest. Yeah, yeah. Small cap
Exactly.
discoveries, of course.
Yeah.
But so I want to come back to more like kind of general. We'll come back to some of that stuff. But I also now want to dig in specifically to, the UGE deal itself and the pricing of it, how you guys came to that decision that, okay, this, we all agree, this is the fair deal. How did you arrive at, okay, this is where we feel most comfortable bringing this to our shareholder base for a vote to ultimately then sell the company?
Yeah. And it's a tricky conversation because on the
I
one
bet.
hand, yeah, like, I think that, I think at the end of the day, the two main bookends, one is, hey, we're building a lot of value in the business on the one hand. And then there's also an aspect of feeling like you could say this in different ways, but caring a lot about our shareholder base. And also at the same time, understanding that that shareholder base has the power to squash a deal if the pricing wasn't right. And so if you look at our stock chart, like we had, I'm not saying this is like why the price ended up being at $2, but like we bounced off of around $2 in September, October of last fall. So you know, I think that the share price sort of was dwindling a bit this year for, in my opinion, like no good reason. But like that was the maybe the ending up at a 270% premium maybe speaks more to us being like really tight-lipped on the fact that there was a deal, like you said. Everybody was surprised when the word did come down that we were going private and so on. But yeah, I think it was a matter of like trying to get a fair price, a price that shareholders would accept. I think UGE, like ourselves plus Nova, everyone wanted to do a fair deal and a deal that at the end of the day wouldn't be all for naught if the market just turned it down. So I'm sure it's a tricky calculus. Every time you see a new one of these deals announced, I think it's a tricky calculus that probably everyone has to go through.
What would you say was the hardest parts about being a public company, and being a public company CEO? I know I kind of already pseudo asked that, but like
Yeah.
specific to UGE, and especially, I guess, in the last couple years where like, all right, we did the pivot. We're seeing real value now being created as a result of this pivot. What was, I guess, in the last couple years, what was the most frustrating part?
Well, I think the a general point that very much reflects back to UG, which kind of is in line with some of these points that we're talking about, is like I get the feeling like this is maybe true for other microcap markets too, but like if we just think about the Canadian one, like needing to raise money is like the kiss of death. Like I feel like in many ways, right? And the um I think that investors probably do best when they find a company and kind of like harvest the returns as opposed to participating in funding its growth story. And I think this probably speaks back to the depth of investors in the markets and also like things like warrants and so on that take that play a role in equity raises in the markets. But I think that like if your question was the hardest part, I think it was growing the business and funding the business optimally. It was like the markets we were in drove us so extensively towards not needing to raise money. And of course, we raised green bonds, which was part of the solution for us in that regard, which were funded by our development stage projects as we grew out that portfolio. But I think like ultimately, probably like the strength of our balance sheet and cash in hand, et cetera, and trying to make sure that we were living up to what I just described meant that our balance sheet wasn't as strong as it could have been to get the best financing terms that we could have. Our working capital position wasn't as strong as it could have been to move as quickly as we would have liked to on projects. And it's like bit by bit, these things stretch out timelines, and bit by bit, these things lead to higher debt terms or worse off tax equity terms with our clients, et cetera. And I think like at the end of the day, the go private largely is looking to solve that as much as anything. It's like a stronger balance sheet, a stronger story, you know, et cetera, for us to be able to grow the company as efficiently and as quickly as we can. So I think that's probably and I get, I get why that's the case. And I think it speaks to the supply demand imbalance between companies in the space and the number of investors in the space and the lack of institutions kind of, in the market caps we're talking about, et cetera. But that was probably the trickiest thing. And this is, especially true, I think, for UGE because, what do? We invest in developing projects. We invest in projects. It's a very capital intensive business, most of it being non-dilutive, but not all of it. So I think that's probably the trickiest part.
Absolutely. So what was the reaction from some shareholders, once you made the announcement? Was, some supportive? Was there a mixed bag? I know I talked to a few shareholders, so I'm kind of answering this question myself. There was a mixed bag. So let's dig in. What was some of the feedback that you were getting, and that maybe we can address here.
Well, um, I think at the end of the day, the fact that we really fought hard for the shareholders and for a fair deal and a good premium, I think it's the highest I've seen this year for sure. Is I think that you probably had people be like, crap, like I was expecting to hold this for several years and do better than $2, but at the same time, I understand why you're doing it. It's a good short-term return, and so from that perspective, I think there was a certain amount of hopefully respect of sort of like, okay, like you did what you could to get a fair shake, and we would have loved to have held you longer, but we wish you well. I think there's also, I mean, I think that there's probably like the second leg of that was like, well, now that you're going private, when can I get my funds? Because I've seen these other opportunities, because there's different opportunities popping up, and as we've been talking about, there is a lot of other great opportunities out there in the space, and so I think that there was as we announced the deal in late May, I think as sort of reality set in the maybe week or so after that, I think people thereafter became probably that much more supportive and like, okay, good on you. And I was I had a little apprehension, I would say, about what the feedback would be, et cetera. And I tried to have as many conversations as I could with our supporters and make sure people knew how appreciative we were of them, et cetera. And so at the end of the day, I'd say like conversations were pretty amenable.
Absolutely. Were there multiple bidders on that came in, or was it just Nova?
So we didn't run a process. We had received a couple indicative bids in that late 2022 timeframe, and so we had like a sense of how the market was or like the private market was potentially going to value things, etc. We did go through. There was a fairness opinion from Origin Merchant Partners, but before that, our special committee also hired them for like a financial advisory scope to try to gauge fairness and what the process would look like if we had opened up a process from there. But at the end of the day, felt like Nova and UGE were both pretty well aligned in terms of like, hey, fair deal, focused on growing this for the future, where everyone's going to be able to sleep easy at night.
Absolutely. I mean, yeah, because I mean, I've seen some feedback about out there where it was like it seemed like it was just it was Nova and not out there seeing if there were other potential. I guess it's more of like indicative of the idea of like, all right, well, was this was this an acquisition that were they actually trying to get acquired versus like, all right, this was an offer that was we couldn't refuse, right?
Yeah, yeah, and I would say maybe like a version of that. I think at the end of the day, it was like an offer that made the most sense for the business, ultimately. And I think the um, yeah, going back a little bit more in time, I mean, as I may have even said it to you, I had said it in public forums, but like in that sort of late 2022 timeframe, I had said in a few forums, including on I think our quarterly call once or twice, like, hey, we're having a lot of people contact us. Like, eventually the jig is going to be up here if this gap doesn't close, and we held off for a while, but eventually made the move.
Absolutely. Let me, another question that I had was, just in general, because I mean, right now, I mean, the majority of the takeouts have been by private equity in the last, year and change, 2 years. I mean, what do you make of that? Right? Like, I mean, because there's a lot of folks out there that would say that, all right, another, PE firm just, kind of getting a sweetheart of a deal based on other, our own math and what our own projections were for this business, and which is why we wanted to hold this, for a longer period of time. What do you make of that?
Yeah, I think I've heard the numbers before, and I forget what they are now. But I think like even within renewable energy, where we are, there's a lot more capital in the private markets and the public markets right now. There's just like a lot of money that's been raised, and maybe for some of the same struggles that a public company CEO and CFO go through, a lot more companies are staying private for longer. So the yeah, I think it's I guess at the end of the day, I would surmise that it's a matter of there's a bunch of money looking for deals, and like, from my brief interactions with various private equity firms, I think like, legitimately they spend a lot of their time looking for good deals, and there's only so many mid-market companies out there to acquire in whatever sector they're after. So I think on the one hand, there's money looking for deals, and on the other hand, there's a bunch of Canadian public companies looking for money, and there's not that much money in that space right now. So I think this natural sort of supply and demand imbalance plays out in both cases. And so, that'll close eventually. Maybe after a whole bunch more acquisitions in the Canadian market. I will say, like, after we closed our deal, I certainly heard from folks being like, hey, don't be surprised if you hear the same about us one day. I do think that there's probably quite a bit of activity happening behind the scenes there.
No, we were joking. So we're recording this on Wednesday, September 11th, 24. And I just put out my preview episode with Paul for our upcoming Vancouver conference. And we were joking, like, we need to get this, this conference needs to happen right now because like we already had one company that signed up and then got acquired. I mean, like this might,
Yeah.
we got to
Well,
move quickly here.
yeah, well, as you know now, a month before we announced our transaction was, or maybe it was a little more than a month, but it was my favorite conference of the year, which is yours in Vegas. And I know not your only show of the year, but your Vegas show has been a must attend for me here in the last bit. And things take longer to play out than they do, but we were. Well, we had signed up to present, and then this was maturing, and maybe I'll joke about it now, but I ended up calling in sick because it was like right in the midst of this deal, and I just could not risk saying something accidentally or what have you. Right? We just had to be very tight-lipped, and so I was sorry to miss it. I promise that I'll be there next year.
Yeah. How's your back? Is your back better? It's
Well,
okay.
in my defense, I do have a bad back. And I was having a tough week with it being a little tight, but no, thank you. It's doing all right.
Okay, good. That is hilarious. All right. I mean, we covered quite a bit, from the deal, how it kind of matured, overall perspective on some of these, not just Canadian, but microcaps being taken out, not just by PE, but also from strategics. I mean, is there any final thoughts having to do with either, being public company CEO, the experience that you just had from the last 9, 10 years, to selling a business just in general? I mean, that's a big accomplishment on its own. Like, I think anybody listening here, whatever side of the aisle you were on, ultimately, like that's a big accomplishment, right? And something to also to be applauded and praised. So I mean, any kind of final thoughts having to do with any aspect of this experience thus far?
Well, and I appreciate that. I was going to say, and you know, well, something that when you started your last little statement, something you had mentioned triggered something in my mind, and that is, I mentioned earlier about, hey, there was a time where we were, seeing small growth stories covered on BNN in Canada and things like that you don't see as much. But in the wake, you're absolutely right that folks like yourself with your online platforms are maturing, are gaining a bigger audience, and probably going to end up playing a bigger, better role in that. And maybe that's a transition that we're going through right now. Is that right there? And so I think success begets success, and I look forward to following the markets here further, and seeing it mature, and seeing this, what I think we both see as you know disconnect between value and the strength of these companies playing out in real time. So no, there's that, and I look forward to continuing to be around it as best I can. And who knows, maybe I'll have another trip around the sun here in the markets in some way, shape, or form down the road. And if that's the case, I look forward to that for sure as well. Yeah, no, but it's always been a pleasure to speak with yourself, and look forward to doing it again.
For sure, man. Hey, you said it here first. We'll be following your career closely, that's for sure. But at a minimum, now you're gonna, hey, we'll see you in Vegas, and as as a private investor, coming and looking at deals. So, Nick, really appreciate all of our conversations over the years. I know we're going to continue to have some fun talks, and I mean, I guess people can get in touch with you via LinkedIn and stuff like that now, right? I mean, or do you still have your UGE email? I think you do.
I do. Yeah, yeah. No, and like if it wasn't clear, I'm sticking around. The management team's sticking around to grow it in the next chapter here. But yeah, folks can definitely reach out to me. LinkedIn, Twitter. I'm on there. I'm not very active, but I'm lurking. I'm lurking. So if you message me, I'll respond. And yeah, and I do plan to drop in and say hi in Vegas next year. I look forward to that.
Very cool. All right. Well, Nick, thank you again for joining me today. Really do appreciate it. Good luck. Stay safe. Congratulations. And I look forward to our next conversation.
Thanks so much, Bobby.
Thanks.